Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York on Thursday, June 2nd, 2016, and we are looking at the Dow Jones Industrial Average. Although a moderate move, it is a upside move to say the least. Of course, we're still below 18,000 on the Dow trading at 17,838. Now that puts it up about 0.25% on the day. When we compare that to the Standard & Poor's, up also about 0.25%, but above 2100, 2103.75. And then lastly, when we look at the NASDAQ, that's also trading higher by about 0.25% at 4532. Traders, which brings us to our current chart. Standard & Poor's currently trading 2104. And more importantly is the fact that we've got some critical data coming out tomorrow. The jobs report is going to be released tomorrow. We have FOMC meetings not only in June but July of this year. So there's going to be two instances over the next 2 months in which the Fed can raise interest rates. And with all of that data in mind, the fact of the matter is we've got 2100 right here. I'm just going to put a straight line there. We've got these highs up here. And it's important that I come in as straight as possible, that we have not achieved yet, but we certainly are in the right direction. We've closed effectively above 2100. It's just the jobs report, because of the fact that we don't know what that is going to contain in terms of the numbers, we could see some increased volatility. But as I've been saying for the last couple of weeks and really the last couple of months, is that at some point, U.S. equities, I believe, are going to make a stab to take out these levels here. Of course, we have 2117, and I believe that that is our record high in the Standard & Poor's. That's why I've got this dotted line in here. In fact, all we have to do is compress it to see where that number comes in at. And that, of course, is this area. We've actually had it as high as 2134. That is our record high. But as we quickly approach these series of tops here, we are doing it in such a way that I believe that we will see the market consolidate, not really sell off, but form a base, and from that base move higher and move past first these price points here at around 2100, because we have three areas in which that has proved to be extreme resistance in October, November, and then December of last year, November and December of last year, and then of course at the end of March, beginning of April, on this calendar year. So we do want to see how it reacts, but we are close to these highs. And as I said, I believe at some point over the next 2 months, we will actually go and flirt with these highs above 2100 and actually as high as what, 2134. And traders, obviously the key to positioning ourselves, because I do want to get long the S&Ps, is the fact that when we are this close to the top, my concern is that we get some sort of profit taking, whether it be a mild correction or a deep real correction in the marketplace. I don't want to buy the top as it comes back down. That being said, I am more comfortable either A, buying the dip, and as I said, I would look for the dip at around 2080. We came close, but we certainly didn't have it come to those numbers, or actually buy the breakout when it moves above these series of tops here, which we are extremely close to right now. I'd rather buy the breakout or buy the dip than buy the market as it sits near the top but has not broken through. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review, and I have a feeling tomorrow might contain some fireworks. Talk to you then. Bye-bye.